Good evening to all, and thank you for joining this new webinar in association with IG and Mr. Lee Sandford. We welcome you for this new webinar that will talk about understanding the trends, and I will hand over the microphone to my dear Lee Sandford just after a very short presentation of IG Bank for the ones who don't know us already. So after we will start with the presentation, and in the end we will naturally have a few questions, and after that a little questionnaire for you to help us to improve the quality of those webinars as always. So let's start with the disclaimer, obviously, because you probably all know that CFDs, which are the products that IG Bank offers, are without that they should be treated with security. Of course, they be risky for the people, the investors who do not know the details of these products. So please always be conscious of the risks you take whenever you trade CFDs. As a global trading leader, we were very happy and excited to come to Switzerland back in 2014, and obviously also be very happy to obtain the banking Swiss license by the FINMA and to offer a local expertise to our clients. IG Group is now more than 45 years of trading experience all over the world. They're present at the moment in 14 countries, and we have just a bit less than 200,000 clients worldwide, and I'm talking about active clients. So you can imagine that it requires a very stable system behind, and that it is the next slide after that I will show you. IG Bank, as I said, was established back in 2014, is regulated by the FINMA, so the Swiss regulators for financial companies and banks. And we are very glad to offer our clients the possibility to visit us as well in two locations: Geneva, the first one, and Zurich Paradeplatz, which has opened a few years ago. Trading with IG Bank is not only trading with a Swiss bank, but also having the access to over 16,000 markets on a very professional trading platform. We also offer, beside our in-house platform, we have the pleasure to offer our clients other technologies such as Pro Real-Time or MetaTrader 4, and obviously around the globe we are naturally considered today as the #1 for CFD trading, because we really put efforts to always be at the top when it's regarding CFD trading, and we try to always listen to our clients and progress with them and their trading experience. We try to offer a local support on a 24 hours basis, thanks to our presence over the globe. We also have this expertise of a Swiss bank, obviously. As I said, we are audited by the FINMA, and the education takes a very important part. You are all here as well, actor of this education part of the platform. It's called IG Academy, and we are very proud to put that in front of our marketing plan and image, because this is very important to have educated traders and educated clients, so we can follow up and on a very successful journey. thank you again for being here. I will now hand over the microphone to Lee, so you get all to know a little bit more about the trends and this very, very interesting topic that is to follow.
Good evening, everybody. Welcome to the this webinar this evening. Great to be here. I had a fantastic time in Switzerland. I want to say first, thank you to everybody that made me feel welcome. Coming over to Switzerland recently, had a great time. Actually met new friends, got new friends. So absolutely delighted to have had a great time. So I just want to say thank you very much, not to IG, but also to every one of you that attended those events across Switzerland. So very nice time, guys. Thank you very much. Okay, so what we're going to do, we're going to run for about 40 minutes here. We're just going to go into something really simple about understanding trends. Now, the level of traders at the event was anything from complete beginner to advanced traders and possibly fund managers that attended the event. So I'm going to just keep this as simple as possible and go through, hopefully you're going to learn something, and just go through, a bit about understanding trends. I mean, we could go on this webinar and talk about trends for hours and hours and hours, but of course, you haven't got all the time in the world to be here with me tonight. So thank you very much for attending this evening's webinar. Okay, so let's just go into the agenda for what we're going to learn here. We're going to go into trend structure, understanding trend. I'm going to show you a really simple tool to know when a market is going to trend well in a direction. And then we're going to show you how to understand that you're in a big, strong trend. And then step number 3 here, I'm going to show you the end of a trend. All right, so it's quite relevant at the moment because we've got, we've got the stock market indexes like the DAX, potentially just about to have a little bit of an end of a trend in the short term. Still very bullish in the long term, but maybe a little bit of a short reversal coming in the German DAX. All right. If you've got any questions, I know Harold mentioned at the end, but I think if you've got any questions, just type them in and we'll certainly get time to answer those questions throughout the webinar, guys. So if you've got any questions, please feel free to do that. Just a quick background about myself. I've been trading 17 years now. I started my first trading account was with IG Index, and I've been trading with IG Index for that length of time, and it's been great. Thoroughly enjoyed the experience. They are the best broker, absolutely no doubt about that whatsoever. And I often speak at Charting the Markets TV with IG on a monthly basis on the TV, so often on there. We also at Trading College was the company we started 10 years ago, is a company that teaches retail traders how to trade the markets using technical analysis. So everything that I'm doing, guys, is based on technical analysis and charts. I don't look at fundamentals. I'm an analyst. I look at chart patterns, and it's kept me in good stead for many years now. All right, so all our courses are CPD accredited. If you want to check out tradingcollege.co.uk, then we are certainly online with courses, and we've certainly got people from Switzerland that are on our programs and all over the world, from the US, Australia, all over the world, guys. This is just a classroom course that we held for some of our students. Okay, so why do we need to know where we are in a trend? Well, of course, it's obvious, isn't it? Because we want to make a return, and when we place a trade, we want to make a good return, a big return. So if we're at the end of a trend, of a major trend, then the chances of making money to the long side are dramatically reduced. So we all want to be at the start of a new trend. And when you're new to trading, you seem like you're the person that has missed the trend. So hopefully going through these slides, we can give you a bit of structure of what a trend looks like, and we're going to use some Fibonacci work as well. Now, you may well have seen this at the course that we run, the classroom event that we ran in Zurich. And I just want to go through this because this is so powerful, and it is the foundation of a trend every single day. Whether you're trading off a weekly time frame, a monthly chart, or a 5-minute chart, or an hourly chart, this structure sets up all the time. And if you know this structure, then you can be on the right side of some very nice trends. So let's just get the spotlight here. So hopefully you can see that, and I'm showing now the price structure using Fibonacci retracement slide here. An impulsive move is when a move moves in a direction, as far as I'm concerned. Okay, so an impulsive move is when the market goes up, and a corrective move is when the market goes down. Okay, let's just turn that off. Looks like it's not. Oh, here we go. We're working all of a sudden. Sorry about that. So the corrective move often comes down to what we call 76.4%. Don't worry, I'm going to show you how to draw this in 1 second. So when a market pushes up, and it could be any market, of course, on any time frame, we draw 76.4%. That is the swing from number 1 to where the trend started. If the price holds at 76.4% Fibonacci retracement, we are likely to go into a rather large trend to the upside. And so all the time I'm drawing 76.4% on any move that's happening. And then what happens is that this is the accumulation phase. And then we get into this big trend potential where the market could push up. And then we have a pullback, which comes to 38.2%. Don't worry, I'm going to show you how to draw this in 1 second. And then we start to get into the maturing phase of a market. And then the market gets into the saturation phase where it actually is overbought and it's the end of a trend. And I'm going to show you exactly the euro-dollar forex currency trend reversal using this process. And then we get an A, and then we get a B, and then we get a C move down, and then we get a new trend to the upside. So just taking a picture of this, this is the whole structure of a trend. Okay, we make higher highs and higher lows, but we often pull back to the accumulation phase of 76.4%, 38.2%, and that is it. That's what we want to really draw. As long as we're above those two numbers, then the market could be trending higher. So let's just look at this. Let's just take a look at this euro dollar, and it could be any market, euro dollar weekly trend started in 2017. Could we have known that the euro dollar was going on a big move higher from 105 all the way up to 125? Let's piece this trend together. So back in 2018, let's look at this trend. So we're going to use a simple tool called the Fibonacci and extension tool. Now you've got this in your IG account. You can easily use it in Pro Real Time. The IG desktop platform uses the retracement tool as well, so it's really easy to set up, and it's underneath Fibonacci retracement. So let's take a look at the start of this move back in 2017. The euro dollar, because it had an impulsive move higher, the first move, it pulled back to nearly the 76.4%. That was the start of this huge trend up to 125, guys. So let's just take a little look at what happened here. So what we've done, we've drawn a Fibonacci retracement from, let's just get a pen for you to show you, from this low here to this high. Okay, and what it's done is projected this dashed line is the 76.4%. Now, if price holds 76.4%, which means it doesn't go below it and drop below the start of the trend, then the prices now could have an impulsive move much higher. So every time we're looking for an impulsive move, we look for the corrective move, and then we draw the fib retracement. Then we're looking for long side trades. Okay. Now, what happens here is that this junction that we call the 76.4%, we're all watching that. If it holds, we can reverse and push higher. Now, what happens then? I've got some moving averages on my charts, and the moving averages cross here, and we've also got price above the moving averages. So what that's basically telling us is that price is increasing, the average price is increasing. So we've held the 76.4%. Now we could go on a long trend to the upside. So the market pushes higher, this junction holds, and now we can push nicely up. So we draw the retracement from the highs, from the lows to the high, and it projects that 76.4% right there. Okay. And then we start to go on this big move. All right, so as you can see, we push up on the euro dollar, and the euro dollar has big wide range candlesticks. Big green candlesticks means that buyers have stepped in to this market. And then what happens then is that the next junction is the next pullback. Now we know that this is a bullish market on the euro dollar because we've stepped into from the 76 junction, and now we're pulling back to make the final pullback, which should hold the 38.2%. On this example, it doesn't get quite at the 38.2%, but then we trade above the moving averages. That's our long buy signal, and we continue on our march up to 125. So it's really simple. Number one, 76.4% fib retracement, and then number two, the next pullback comes to 38.2%, and then we'll find that it's coming close now to the end of the trend. All right. So every time you're looking at a chart, and we're going to show you some examples, just make sure you're drawing the fib to make sure you're staying on the right side of this trend. You don't want to be short in the market after it has reversed at 76.4%. All right, so to get the retracement tool, we need to draw from the low circle to the high circle, and then the 38.2%, which is this dashed line, will appear for you. We stay above the moving averages and we push higher. Okay, we have at Trading College our own proprietary software. So when we get the junction at 76.4% holding on the fib, then we wait for the green candlesticks. And this is just one of our proprietary software that we use at Trading College to give us our entry. Now, the fib retracement tool, guys, is up here in pro real time, is at the highs. You can see it up here. This is one of the tools. All you got to do is just set the tool to 76.4% and 38.2%, and it's on all of my charts. So I can certainly use it all the time. All right. Okay, let's have a little look at, there we go. All right, so just to recap here, then we're going to go into the examples. Any impulsive move that you see on a chart, measure the fib retracement and see if it finds the 76.4% junction. Enter a long trade when your long trigger, with your long trigger. It could be a price above the moving averages, or it could be any indicator that you look for or use. Your stop placement is underneath the very low of the swing, and this could be a big move. So make sure that you're using a trailing stop at all times. All right. So how do we know when the end of the trend is coming? It's really simple, because we're going to use the same process. And this is one of the things that I put in my book about 4 years ago when I wrote the book Goals to Gold. It was all about spotting these reversal trades. And this is how you do it. So here is now the end, the same chart, but now we're looking in March 2018. we're actually now coming to the end of this trend. It's the final impulsive move higher. But, you know, how do we know it's going to be the end of the trend? So what we do to the fib retracement tool, we tick a box and we basically add the 1272 fib extension. Now, the 12 fib extension, of course, extends 27%, 0.2 of the 100 Fibonacci. So if we take that move from here to here, 1272% is an extension of that move. So what it basically means, it's very much extended to the upside. And so now we're looking for a reversal. So we've had a 1, a 2, 76.4%, a 3, a 4 holds 38.2%, a 5, which reverses at a 127% fib extension. It's an extension, not a retracement. And from that extension, the euro has not recovered since. Okay, it's all the way down to 110 here and has not. So that was basically the end of the trend. But how do you know, what things can you use that are going to help you, spot when that market's going to reverse? Well, we can use a real easy indicator. Our system here does the work for us, but I'm not here to talk about the pro trading system, but that will give you a red signal to short in here. But you could also use a simple MACD indicator. And of course, IG will have MACD indicator in Pro Real Time, and it will be in their desktop platform as well. So what happens here on the MACD, and remember the MACD, because we discussed it in detail at the event in Switzerland, is that it's based on moving averages, the signal line and the MACD line, the green and red line, the histograms. So as the price moves up and makes a new high, we measure the fib extension, but then we also see that we've got some bearish divergence here. The lines are lower than the previous high. The histograms, which measure the separation of the lines, are lower than the previous high. That tells us that the market is getting weaker, and that tells us that we could see a reversal. So this is picture perfect. This is textbook trend analysis. It's not always perfect. As you saw, we don't quite often reach the fib junctions, but the junctions give us structure to tell us where we need to stay above, to tell us that we're going on a move. All right, so the end of a trend is one of my specialities. I love trading the end of a trend. It provides us with a huge amount of profits. I traded this in 2012 gold, when I shorted gold, had the same signal on gold. It's one of my core trading structures and strategies that I look to do, because what happens here is that at the 1272 fib extension, it catches a lot of people out, because people are buying the highs here, not realizing that we've made a 1, 2, 3, 4, 5 impulsive move, and that we've got some big bearish divergence at the lows, and now it's time for a major reversal. All right, so that is it, guys. That is the structure of a trend. It's a simple structure, but it works very powerfully indeed. So let's just take a look now at some examples in up-to-date charts. Here is the dollar index. Let's grab some water. Here's the dollar index, and I have been plotting this with our members, since October. If you take a look at the dollar index, remember it's a basket of currencies, very much weighted opposite the euro. So the dollar index, whatever way the dollar index goes, the basket, the euro against the dollar does the opposite. But you can see, and we're going to talk about shorting here. So we're placing trades to the downside. You see this high on the dollar, it came down. So that's for me, that's an impulsive move. As the market retraces, we measured 76.4%. It reversed exactly off 76.4%. Okay, so now I know we've got a potential big move going to the downside. So then we get the big move down, all right, on the dollar. And then these last few days, we have rallied all the way back up to 38.2%. We hit 38.2% exactly, and the market declines 5 to 6 trading days. Because I know the footsteps, the print of a trend, it allows me to participate in those markets and know where the turning point is, and I know that I can risk a small amount of money to make big, especially at the 76.4%, because I know after that the trend could be quite a big move. Now the dollar's rallied a little bit higher today, and it's still below the 38.2%. We still haven't made a break below this 96.76 price in here, so we haven't made a final wave where it's going to get a big reversal. So we're still in this bear move here on the dollar index, guys. So really nice move to the downside. And it doesn't always work. It's not perfect. Nothing in trading is perfect, but it gives you structure. Here's the DAX on a daily chart. Now, I know a lot of people in Switzerland like to trade the DAX alongside your equities, which is great because you can use this on absolutely anything that's got a price. Here is the DAX, and we had a really nice low in the market in August. The market went up, it came down. We measure the fib retracement. It hit 76.4% exactly. That's where it held. Now, if it had dropped below there, then I wouldn't be getting long because we would probably be going for a new low. The market reverses, and then we go 1,000 points higher in the DAX. Okay, and then we get a retracement here, and then we don't get a follow through, but we get what we call a zigzag, and then it goes up and makes its new high here. But it was this area here, guys. It was this 76.4%. That was the key to tell me we were going on a big move. And I've just seen here on the left-hand side as well, can you see this move down here in July? I bet that impulsive move and that corrective move was 76.4% as well. Then in wave 3, 38.2%, wave 5, with divergence, the market goes up. And then you just keep on drawing and drawing, the fib every time there's an impulsive move. Okay, so really nice move there on the DAX, and we haven't looked back since. It's been an absolute fantastic trend, and we know that we're not at the in this area at 76.4%. We know that it was the start of the move, so we can hang on to this trade and add to the position. And this is where you can accelerate your trading account and grow your trading account really quickly, if of course you understand risk, and if of course you know where you are in this trend. All right, so very nice move on the DAX. And by the way, I'm using pro real time here. These are the charts of pro real time. So I spoke about the daily DAX. So what about the 4-hour time frame? As I said, it can repeat fractionally on any time frame. The lower the time frame, if we start going down to 2 minutes, it starts to get a bit messy, and 5 minutes. And if you're a new trader, for me, if you are a new trader, then I would suggest that you do bigger time frames. Anything above 1 hour, you don't want to be down to smaller time frames. You want to be looking at 4 hours daily and weekly. I would like you to trade less and make far more return. And if you can catch some of these big moves, these big trends, then you're going to do less and make more. All right, so here's the 4-hour DAX trade as well. So we come down, we go up, big swing back down, So remember, you're just measuring. Every time there's an impulsive move, you're measuring. Back down. At this time on the 8th and 9th, I found that we stayed above the junction of 76.4%. So as soon as we stay above it, we go then above the moving averages, we start to trend, and just look at the wide range candlesticks. Look at the wide range candlesticks. And then it's all about just trying to find 38.2%. All right, but what a beautiful move here all the way through from on the 4-hour time frame. Okay, very nice indeed. Very nice move in the DAX. If the market had gone below 76.4% and closed, the close is the most important, not the range, not the range of the candlestick. It's the close. If we get a close below here, then all trades are off. We're not looking for long trades anymore. It's still short side trades. Okay, the close is the most important thing. I'm always looking at the close of a market, of a candlestick, to confirm that move. All right. Stocks, equities, Netflix. Netflix has been in trouble recently. Obviously, subscriptions have reduced. We're getting the likes of Disney and Apple coming into the market. We had a big decline in Netflix on price. Excuse me. And you can see that we found a base at $251 here. Impulsive move, big impulsive move, yeah, big impulsive. Get the retracement tool out, measure. As the market comes down, we hold 76.4%. And this is where we are as of yesterday. All right, so it moved up from $267 to $229. And that's, I mean, you know, we could be, in weeks to come, we could be way up here. If we can get above that 200 period moving average, we could be way higher. But the great thing about this, you would have your stop, you know, if depending on your risk management, of course, risking no more than 3% on any trade. I mean, I'm encouraging new traders to demo trade to start with, and then, you know, risk up to 1% to start with your trading account. If I had a stop underneath here and the price, and I entered around here, let's say I entered around here at $270, you know, I would be getting my stop to break even as soon as I possibly can. And there's no doubt about it that as a trader, I mean, I'm trading virtually every day. You know, it's the hardest thing in trading is knowing when to trail your stop. When you're in a big profitable trade, where do you trail your stop? You know, the greed kicks in, you want a little bit more out the market. But with this sort of structure of a trend, you can get your stop to break even, and then you can manage it with a trailing stop, because once we come out of 76.4%, we could certainly be in a big range market, guys. Okay, so trading stop is king, and use a 2-bar trading stop. I would use every 2 bars, just put a trading stop underneath that candlestick. So Netflix here, really good support and a really good move. Let's look at a trade that didn't work. Let's look at a trade that didn't work, because easy enough to say, you know, and give you picture perfect setups. But look at Apple shares here. We have a trending market higher on Apple. We have a big move down, and then we measure 76.4%. Well, on this trade, it actually reversed off 76.4%. So that met the criteria. We now need a move below the moving averages to get short. Now, you could enter at 76.4%, but we do like the confirmation that sellers or buyers are in control. But this one went down for 1 to 2 days and then completely reversed and pushed higher. So if you were in that move and it pushed down, I mean, it's a hefty old equity, hefty old priced stock here, Apple, and you got your stock to break even here, then you would have been stopped out for a no losing trade, and you know, let the trade then run away with itself to the upside. You wouldn't be in it. But you can see here we didn't trade cleanly below these moving averages for more than one day until it reversed. Okay, so this was a trade that didn't work out. This was a trade that didn't reverse and go on a leg to the downside. That's trading. That's what happens, and it's not a perfect scenario. Okay, here is the FTSE 100, and this is our index here in the UK. This is our indice that we do like to trade alongside the German DAX, and you can see that this is on a 4-hourly chart here. We make a high, and we have this big 1, 2, 3 down, and then we get a fourth and a fifth wave, and then we have this huge, great big retracement. Now, I was looking at this 3 days ago and reminded myself, why are we not going above 7,350? Why is the FTSE not above 7,350? Why is it not trading above there? And of course, once I'd drawn the retracement on the 4-hour chart, then it was at the junction at 76.4%. It wasn't penetrating that area and pushing through. So while that was happening, it's all a case of that. Okay, I've got to watch this, because we know, don't we? We know the rules state that we like to use here, that if we hold 76.4% junction, we could be much further down here. And in this case, we still have to wait to see whether that is the case for this market. Here is the dollar-yen currency pair that we like to look at. Now, here's the weekly chart of the dollar-yen. Okay, why did it reverse at 112.24? Why did it reverse there? Well, of course, it's simple. We just draw the impulsive corrective move at 76.4, and you know what? It reversed on the weekly chart exactly at that area. And it's moved down, nearly 1,000 points, 800 pips lower from that swing. And you could see, if you just, once you learn the 76, you can actually see where they are. They reverse everywhere. And you see, though, not everyone's a great big mover, but you've got to be in it to want to make a return from it. So very, very nice move down in that market on the dollar-yen, guys, and very nice reversal to the short side. We've still got more downside potential on the dollar-yen, and the structure for another leg to the downside on the chart is still in play. What about the cryptos? Cryptos seem to have gone out of fashion since Bitcoin spiked nearly to 20,000. I'm sure they'll come again soon. And we're starting to see some new buy signals on Bitcoin this week already, and a little spike higher on Bitcoin. It's not for everybody, because it's a hefty old price, and the spread and the commissions and spreads can get quite wide, and this thing can move. I've seen it move. I mean, in that we hold a scan club every Monday night for members. I saw this, I was in and around it here, watching this thing drop. Like one day it dropped about 3,000–4,000 points in one evening, and watching that happen, it can be quite scary. But anyway, it's all about managing risk, and we are certainly risk managers, and we're always trying to make sure that we're not overexposing ourselves in our trading account. But if you take the swing, that big move up in Bitcoin to 20,000, we have a very steep retracement corrective move exactly at 76.4%. We go up for 3 or 4 weeks. Now that's 6,000 to nearly 12,000, guys. That's a 12,000 point move. We couldn't hold that 76.4%. It touched it once, it touched it twice, 3, 4, 5. Then suddenly, boom, we break through 76.4%. and the market fails at that area. But if I was taking this again now, if I was drawing the fibs again now, I would take it from here to the high, and I would see, is that 76.4%? If it is, then that is a beautiful move. And is that 38.2%? Maybe a little bit lower, maybe 50%. Because if that's the case, we still could have more upside here on this weekly chart of Bitcoin, if that's the case. And until we get below these lows here, 4,000, and start really trading below there, because what will happen, guys, you're just drawing it all the time. What we could do is draw it from here to see whether 76.4 holds here, and then that might be the move. All right, as long as it stays below those junctions, then it's absolutely perfectly fine. Here is the euro. We've just got two more examples. So the euro, this was yesterday's trade in the euro. The euro today is trading at 110.70. So it's beyond this chart. It's down here somewhere off the chart. Here's a 10-minute chart. You could use a 15 or 60-minute, it doesn't matter. So this is what happened yesterday, okay? So down, big move to the downside. Draw the retracement 76. We're just shy of it. We don't break above the new high, and then we went 1, 2, and then the euro is all the way down here. Okay, that's making several £1,000s today because of just this simple thing that we were looking at. Euro is trading as we speak at 1,107 and down 50 odd points on the day, all because of the trend structure in this move. And then finally, for an example, another example, here is the monthly chart of the FTSE 100. And you can see here that the monthly is doing exactly what we've spoke about for this, 40 minutes on the retracement. Okay, we've held 7,580, and we're still below 7,580 on the FTSE. We're trading around 7,388 on the FTSE. On a monthly chart, I think personally we've got a leg to go, and we'll use our pro trading system. As it turns red here, we'll be looking for that, all right, to give us confirmation. I think it's one thing having the structure of the fibs. The next thing is the entry. You can use the moving average crossover, an indicator, or you could certainly use our pro trading system if ever you have that system. All right, so that's it really. We've got into that, and then just a little slide. Don't forget this, okay? If you're new, you want to get into trading. If you're new, you want to open an account. If you're new and you want to learn, if you're somebody struggling with your trading, just remember that it's all about several things. And I didn't know this 17 years ago. I soon learned this very quickly. Number one, it's all about managing yourself. How do you manage yourself and your own personality type? Number two, you've got to become an expert in a certain market or markets or a structure or a strategy. Experts get paid more than jack of all trades, people that looking at everything. So become an expert in your field of a trader, and then it becomes rewarding. And then the third thing really here is managing risk at all times. Just think about this here. If you think about if you have 66% winning trades and you have a profit of 2 to risk 1, this is your account's going to grow, guys, okay? But if you're risking 2 to make 1, you need 66% winning trades. That's what I meant to say there. If you're risking 1 to make 2, you only need 33% winning trades for your account to break even. So think about it, okay? Your risk reward is essential to your long-term survival as a trader. You want to be going for these big moves, and that's where the trend comes into play. Knowing where you are in a trend comes into play, all right? And making sure that when you're always trading, you know where you're wrong and you're only risking a certain amount. and it could only need to take a few trades to really give you a 4, 5, 6 reward on your account. All right, which is simple, isn't it? Harder to do, but simple to explain. Always spot, always go for those, try and go for those big moves, guys. Okay, so are there any questions at all? I haven't got any questions coming through my end. Hopefully I'm on the right area here where I can see people's questions. But guys, if you've got any questions offline, I know people sometimes are a little bit shy to ask questions. We do have a trading academy as well with IG, well, not with IG, our own trading college one. If you want to email myself, it's lee@tradingcollege.co.uk. If you've got any questions around what we spoke about tonight or anything regarding trading, I'm very happy to help my Swiss friends out and help them along with their trading if you've got any questions whatsoever. If you want to go over to tradingcollege.co.uk and take a look at, we've got lots of free videos on there as well. All right, so I hope you've enjoyed the details and the trend structure here this evening. Very simple structure that you can go away and use immediately and do some testing. Go and find some charts and start to use the fib retracement tool. Harold, have we got any questions at all? It looks like we haven't from this side of things, but
Lee, you seem to be right. No question sent from our dear attendees. So I guess, like Lee said, you are more than welcome, gentlemen, to send your question to the emails here displayed. Also, do not hesitate to contact us in IG Bank. At IG Bank, we are more than happy to answer other questions you may have, not necessarily about this webinar, but any other events we may organize or the products that we offer, the trading solutions we have here. So yeah, please feel free, as Lee said, do not hesitate to contact us. We would be very happy, as I said in the beginning of this presentation, to have your feedback just to improve ourselves. I would like also to thank you very much, Lee, to have helped us to dedicate even more IG program to educational material and help us with giving some inputs and very nice strategies to our clients, existing clients, or even prospects. So thank you very much again, Lee, for this presentation. We really hope we would be able to do other collaboration like this. And to you attendees, thank you very much for being here with us. And please take the time to just answer the few questions you will have after the presentation. It will be very helpful to us in order to improve the content, improve the quality of our presentations. So when we come back, we have even more to provide to you guys, and hopefully, improve everyone else and each other's. You know, it's a win-win. So thank you again. Thank you to all. And I will wish you a very good evening to all of you. Lee, thank you again.
Thanks, Harold. Thank you, everybody. Always
Thank
enjoyed
you.
it. Thank you.